Hi, I'm Mike Gassewitz, CEO of IAIC. Welcome to another episode of In Focus. Today, we're doing another sector update, the utility sector, and I'm joined by Krishna Beharry, our portfolio manager responsible for that sector. Welcome, Krishna.
Thanks, Mike.
Great to have you on. So just to remind everyone, the subsectors that comprise utilities is the communications service providers, electrical generation, as well as pipelines. And so maybe, Krishna, why don't we just talk about what we saw last quarter and maybe go subsector by subsector on the communications front. What did we
Sure.
see there?
Right. Okay. Well, if we start with the telecommunications companies in Canada, IIC invests in BCE Telecom and TELUS. And I should back up and say that all of the utilities were basically down for the last little while, and that's basically a reflection of the higher interest rates. And
Right.
some of the specific companies have different things going on, but higher interest rates tend to lead to higher costs for them because they do carry a lot of debt. What we focus on when it comes to researching these companies is, are these companies generating more cash than they have to pay out to service their debt and to pay any costs that they have? So when we look at the excess cash that's generated, it's called cash flow. We say, okay, well, how reliable is that, or sustainable is that cash flow that they're generating? And then we apply that to the dividends that they pay out to their shareholders, and that gives us the opportunity to judge whether or not they're able to grow their dividends and sustain their dividends. So that's how we look at these companies.
Right.
So when we look at the telecoms, for instance, they always have higher costs of buying things like spectrum and upgrading their lines, and right now the buzzword in the industry is 5G, and all 5G is a faster network. So
Right.
it's funny how this past weekend I saw video of a surgeon performing remote surgery on a banana. As a matter of fact, the surgeon was in California, the banana was in Tokyo, and via 5G technology, he's able to remotely perform surgery and do stitches on this banana, and it was perfect. It was just very fast. It's a very fast connection. So
Now, I will say, and I won't mention who my service provider is, I would not have surgery on the stability of my 5G network. I'm just going to say, don't try this at home, kids.
right.
Yeah,
Yeah, we should put that disclaimer out
a
there.
little disclaimer. Yeah, for sure.
Yeah,
Now, yeah, I'm in remote Quebec, so I guess I
yeah,
shouldn't, complain too much. But
right.
anyway, sorry.
It's beautiful there anyways.
Yes.
So when we look at the costs of these companies, we look at the excess cash they generate. I mean, we all pay our telephone bills, we all pay our heat and hydro bills, we all pay our electricity bills, and our gas bills as well for heating our house. So we look at the cash that's generated for these companies and we say, okay, how sustainable is that cash level, and how safe is this company's dividend? Because really, we are buying utilities for their dividends, for cash flow in our clients' portfolios.
Exactly. Right. Okay.
So
So
yeah,
obviously, we do that sensitivity analysis, as you say. If interest rates are going up, as we all know, if you're carrying debt, that means higher payments. That could impact cash flow coming into the enterprise. And so we want to make sure, obviously, one of cash leaving the enterprise is through dividends, and so we want to make sure investors are covered from that perspective. And so we
yeah,
look
and
at that.
interestingly
Yeah.
enough, looking at these companies, they saw on the horizon a couple of years ago that higher interest rates were coming. So they actually retired a lot of their near term debt and extended their debt out longer term, hoping or thinking, anticipating that higher interest rates would be over by the time their debt matured.
Right. Okay.
So
So with that, then, so back to communications in particular.
communications in particular, yeah. So they've had higher costs because they generally carry more debt because they're constantly upgrading their networks. Like
Right.
so Bell Canada and TELUS and Rogers in Canada, they're all upgrading to 5G. There's a huge cost to that. the government auctions off spectrum, which is sort of the frequency that they can carry their waves on. So if you think about a remote control, that remote control to your TV, that message travels through a certain spectrum. So cell phone data travels through a certain spectrum as well, and depending on the spectrum, that allows you to get higher speeds and penetration through buildings and things like that. So 5G is right now the cream of the crop with that, and there's a higher cost to that. So the government raises money by holding these auctions for these companies. These companies have to bid on spectrum, and there's a cost to all of that. So these companies carry a lot of debt. With interest rates, the debt gets more expensive. So we've seen all of these companies turn downwards in the last 6 months. That being said, we at IIC have a lower weighting on utilities in general. We've maintained the lowest weighting we ever have for the last year, knowing that this was coming.
Right. Some, forethought in terms of what was, to your point, in terms of what the utility providers were doing. We're doing the same thing, knowing interest rates can't stay near zero forever. So
that's right.
And so, speaking of communications in the U.S., those who follow what's going on south of the border, we've seen some, call it controversy around a couple U.S. service providers, Verizon, AT&T. I think it was the Wall Street Journal broke the story that there was some lead in the cables, and that could provide a health hazard, and basically needs to be cleaned up in some fashion. Any thoughts or comments on that?
Yeah, I guess a little bit of history here. So telecom started when they started laying telephone cable in the 1880s throughout North America. They were lining their wires with lead. At the time, they thought this was good because lead doesn't rust, and it would be great to be buried in the ground, and it could carry messages or data through those lines. So the 1880s, and they stopped doing it in the 1950s when they started coating these lines with plastic. So what the Wall Street Journal did was said, okay, well, all these lines that were buried in those 70 years, lead is leaching into the ground, and lead in ground isn't good.
Right.
So they're saying that these companies are going to have a high cost to fix this pollution issue. Companies like our core picks, AT&T and Verizon, are specifically named in this article that they're going to have higher costs because they've been around. Now, the companies today are very different than they were in the 50s when they stopped putting lead on their wires. So there's a lot of speculation about who will pay for the remediation here, and it's come out later that for the most part in the US, the public will have to pay, and for AT&T and Verizon, they're looking at between $4 and $6 billion. It's not, when you look at the cash flow that they generate, it's not a huge amount. When this news first broke, if AT&T is looking at $4 billion, the stock fell with a value of, they lost about $15 billion in value. It's since recovered a little bit, but certainly doesn't warrant that big of a fall in the stock price. So we're looking at this as, probably good value for our money right now as a potential buy. And especially knowing that the public will be on some hook to pay for the cost of remediation of these.
Okay, good to know we're staying on top of it. So let's look at electrical generation. What did we see last quarter?
Right. Again, this past for this year, actually, electrical generators were down, just because of mostly because of the higher interest rates. That these companies carry debt. They have higher costs right now. The cost to put in a gas pipeline is getting more and more. But all that being said, we still pay our gas bills, and we are looking at regular, consistent cash flows from that company, and from those companies, I should say, and we rely on that stability, and these are some of the most stable companies out there that we can invest in. And so all that being said, the dividends of these companies are still very stable. And we're looking to those dividends to provide cash flow in our clients' portfolios, which we then reinvest. Now, again, I want to reiterate that we have a low weighting of utilities in our portfolios, just because of that.
Okay. So you covered off pipelines there as well. So bottom line, we did dial back our weightings when it came to the utility sector, as you said, because of the rising interest rates. They're still doing okay in terms of cash flow and their ability to pay the dividends. So again, no reason to panic from that perspective. And even the, what's happening in the States with respect to Verizon, AT&T, we're on top of it. We're watching it. And again, if anything, it may present some buying opportunities in the future.
That's right.
Yeah. Okay. So anything else you'd like to add in terms of looking forward in this sector? I mean, obviously, as we go through each sector, everyone's trying to use the crystal ball when it comes to interest rates. And but any thoughts looking forward?
Right. I mean, for once in the finally, utility companies are again looking boring.
Mm-hmm.
And that we like boring. Boring in that industry is a good thing.
Exactly.
People just pay their monthly bill. The company generates cash flow, pays out their shareholders, and that's a good thing. So a boring old utility right now is actually refreshing. So in the future, we're thinking that right now represents good value. So we might start dipping our toes in the water again once we see a little bit more stability, but we think that there's good value out there for sure.
Okay, awesome. Krishna, thanks for this.
No problem.
As always, folks, if you have any questions, don't hesitate to reach out to your accounting firm financial advisor or contact your IAIC portfolio manager. And as always, don't hesitate to reach out to myself. Take care, everyone.
Thank you.